purposes only. If you're new to the channel, then what we usually do is review the CNBC halftime segment and then provide an analysis of the stocks that feature within the halftime report and consider whether they're worth investing or worth trading, or perhaps not even at all. Today is Tuesday, the 2nd of June 2026. So let's get into it, shall we? And start off by having a look at the Dow Jones to see how well that's performed throughout the day. So you see the Dow Jones is trading near 51,200, up approximately 110 points or 0.5% after hitting fresh intraday record highs above the 51,299 mark earlier in the session. Today's rally has been driven by strong gains in blue chip names, including Cisco and Caterpillar. Cisco is up roughly 5%, while Caterpillar has gained more than 4%, helping push the Dow to all-time highs. From a technical perspective, immediate support is located around the 51 mark. You see that on the opening bell, the Dow Jones rose quite significantly before dropping and then has been on a gradual rise throughout the day. From a technical perspective, immediate support is located around the 51,025 with a stronger support near 59,330. So around here. As long as the Dow remains above these levels, the bullish trend remains intact. On the upside, traders are watching resistance at 51,265 and then 51,360. Market breadth remains positive, but momentum has moderated after the morning surge. The index has already traded with a range of roughly 50,850 to 51,299 today, highlighting elevated volatility around record levels. Heading into the final hours of trade, watch whether buyers can reclaim the session highs. Above 51,300 could trigger another leg higher, while a drop below 51,025 could encourage profit taking into the closed. Next up, let's take a look at the Nasdaq. So you'll see that the index opened strong and pushed towards intraday resistance around 23,500. Buyers remain in control with momentum supported by gains in major technology names including Nvidia, Microsoft and Broadcom, and volume has been healthy throughout the session, indicating continued institutional participation. From a technical perspective, immediate support is around the 23,350 mark, followed by stronger support around the 23,250 mark. As long as the Nasdaq remains above these levels, the short-term upward trend remains intact. So the Nasdaq is trading near 27,127, approximately 0.1% to 0.2% on the session, and sitting just below its all-time intraday high of 27,190. Despite some weakness in the mega-cap technology names, the broader technology sector continues to support the index. Today's trading has been characterized by a battle between strong AI-related momentum and profit-taking in some of the largest technology stocks. While semiconductors and infrastructure-related names are attracting buyers, stocks such as Alphabet and Microsoft have weighed on the index at times during the sessions. Technically, immediate support is located around the 27,090, which is around about here. As long as the Nasdaq holds above, technical immediate support is located around the 27,090 mark, which is around here, with strong support around the 26,975 mark, which is around there, which also aligns with today's pivotal zones. As long as the Nasdaq holds above the 26,975 mark, the bullish trend remains intact. On the upside, resistance sits at 27,190, so just above here, the current record high. A decisive breakout above that level could trigger momentum buying towards the 27,300 and beyond. The intraday range has been approximately 26,913 to 27,188, showing healthy participation while maintaining an upward bias. Market breadth remains constructive and the index continues to trade above all moving major averages. Heading into the final hours of trading, traders should watch the 27,190 mark closely. A breakout would signal renewed bullish momentum, while a move below the 26,975 mark could invite short-term profit taking. Next up, let's take a look at the S&P 500. As you can see on the opening bell, the S&P dipped somewhat, but then has been on a gradual incline throughout the day. before tailing off at around 11 a.m. The S&P 500 is trading near the 7,615, so up roughly 0.2% on the session after hitting another intraday record high today. The index continues its impressive rally and is on track for a ninth consecutive gain, supported by strength in semiconductors, industrials and financials. From a technical perspective, the bulls remain firmly in control. Immediate support is located between the 7,580 mark, so around here, and 7,900 mark, while stronger support sits at 7,557. As long as the index remains above the 7,580 mark, the short-term uptrend should remain intact. On the upside, traders are watching resistance around the 7,620 mark. As you can see, it's around here. A sustained breakout above that level could trigger another leg higher towards 7,650 and potentially 7,680 in the coming sessions. Market sentiment remains constructive, driven by continued enthusiasm around AI infrastructure spending and strong corporate earnings. However, investors are also monitoring geopolitical tension in the Middle East and upcoming labour market data, which could increase volatility later this week. Heading into the final hours of trading, the key level to watch is the 7,620 mark, which is here. A breakout keeps momentum story alive, while a drop below the 7,580 mark, so as you can see at the bottom of the table, could lead to short-term profit taking. Next up, let's take a look at the Russell 2000. As you can see on the opening bell, you see quite a large green candle here, straight up at the gates. It's remained relatively calm until 11 a.m. and then it shot up again and then plateaued throughout the day. At present, the Russell 2000 is up 0.86% for the day. Okay, next up, let's take a look at them heat maps. As you can see, the stock that immediately jumps out at you is Google, which is down by 3.25% for the day, as well as Microsoft, which is down by 4.3% for the day. Nvidia down ever so slightly, 0.81%. Broadcom is up 2.96%. Micron Technology again up 1.76%. I don't think there's a stop in this stock. Qualcomm is up. It's a bit of a recovery from yesterday when it was down. It's up today 6.08%. Taking a look at Apple, is up by 2.75%. Utilities are having quite a good day, as you can see. Financials are not doing bad either. JP Morgan up 1.76%. Bank of America up 2.15%. And Wells Fargo up 2.79%. Okay, let's take a look at the groups. As you can see, today's top performer is the utilities, which is up 1.93%, followed by energy up 1.58% and basic materials up 1.37%. The laggard for today is the communication services, which is down 1.9%. Moving on to the week performance, technology is up 6.57%, which is this week's highest performer, followed by basic materials, which is almost a third of the technology sector. This week's laggard is the communication services, which is down 3.52%. Unsurprisingly, the best performing area, the best performing sector for the month is technology, which is up 17.95%. Okay, so next up, we're going to take a look at Uber stock, which again featured in today's halftime report and was a sell by Joe Terranova. So Uber stock appears to be under pressure today after yesterday's strong rally. Uber is currently trading at around $71.40, which is down approximately 3.2% on the session after closing at $73.77 yesterday. The stock opened nearly $72.54 and is traded in the range of roughly $71.40 to $73.10 so far today. Volume is running around 10 million shares, indicating active participation from both buyers and sellers. After a strong run over the past several weeks, the stock is experiencing a healthy pullback as traders lock in profits and reassess valuation near recent highs. From an intraday technical perspective, Uber opened near $72.50, but has faced selling pressure shortly after the opening bell. The stock attempted several rebounds throughout the day, as you can see, during the session, but each rally was met with sellers suggesting institutions may be reducing exposure at current levels. The inability to reclaim the $72.50 area, which is in the middle of the page, has kept short-term momentum negative. The most important level traders are watching is support around the $71 mark. Let me just zoom out. This area has attracted buyers multiple times during today's session. If Uber can continue holding above $71, it would indicate that buyers are defending the stock and could set up a late session recovery attempt. On the upside, immediate resistance sits at $72.50, which is around here, followed by a stronger resistance zone near the $73.75 mark, which was yesterday's closing level. A move back above the $72.50 mark could trigger short covering and potentially send shares towards today's highs. However, failure to reclaim that level could keep likely pressure on the stock into the close. Okay, so next up we're going to take a look at Twilio stock, which again featured on the CNBC halftime report. This was a buy by Joe Terranova. So Twilio is currently trading at $228, roughly flat, so slightly lower on the session, as the stock consolidates after recent volatility and attempts to re-establish direction near short-term resistance levels. Today's price action has been fairly two-sided. We saw early strength pushing towards the 232 area, as you can see, earlier in the day. But that move quickly met sellers, leading to a rejection and a gradual fade back to the 227 to 228 mark. This tells us that overhead supply is still active and buyers are struggling to sustain momentum above recent highs. From a technical standpoint, the key level of the downside is $225, which is here on the chart, denounced by the red line. That area is acted as an intraday support and is the first line where dip buyers are likely to step in again. If that level holds, we could see another rotation back towards the $230 to $232 mark, where sellers have repeatedly defended the price. On the upside, immediate resistance remains at $232, which is today's intraday ceiling. A clean break and hold above the $232 mark, which is back here earlier in the day. There you go, you can see it clearly there. Would be significant, as it could trigger momentum buying and open the door towards the $235 to $238 mark, especially if volume expands on the breakout. However, if the price loses the 225 zone, which is again denounced here by this red line, the structure shifts more defensive in the short term. Below that, the next support zone is 220, which you can see is about there, which would represent a deeper retracement and likely attract strong dip buying interest from long-term participants. Momentum-wise, Twilio is in a consolidation phase after a strong prior move. Indicators suggest cooling rather than reversal. RSI has normalized from elevated levels and price is stabilizing above key moving averages, keeping the broader trend intact. Sector context is also important here. Software and high growth tech names are seeing rotational trading today, with capital shifting between large cap tech leaders and mid cap software stocks, depending on risk appetite. Twilio is essentially caught in that rotation rather than reacting to company specific news. So heading into the rest of the session, the key levels to simply watch are the support at the 225 mark to 220 mark, as previously mentioned, and the resistance at the 232 to 235 mark up here. Overall, intraday basis is neutral with a slightly bullish lean towards the 225 zone, as long as buyers defend support. Okay, next up we're going to take a look at Generac stock, which again featured on today's halftime report. Okay, so let me just pull up a chart. As you can see, Generac is currently trading at $284.41, down slightly on the session after showing early volatility, but failing to sustain upside momentum. The overall tone today is range bound to mildly bearish intraday as the stock consolidates after its recent push towards higher levels. Early in the session, there you go, let me just zoom out. Early in the session, Generac attempted to move towards the 288 to 290 zone, but the area acted as a strong intraday resistance and sellers quickly stepped in rejecting the breakout attempt and forcing price back towards the 283 to 284 area, where it's now attempting to stabilise. From a technical perspective, the most important level today is the 282 mark. This is the immediate support zone and key line in the sand for intraday direction. As long as Generac holds above the 282 mark, buyers still have a chance to defend the trend and attempt a late session recovery. So we've got the 282 zone, which is around here. Let's just see if we can move in a bit more. There you go. So if the 282 continues to hold, the first upside level to watch is the 288 mark, which marks today's rejection area. Above that, a break through to 290 would be significant, as it would signal a renewed breakout attempt and potentially open the door towards the 295 to $300 mark, where large-scale resistance is likely to appear. On the downside, if this 282 mark fails, the next level of support is 278, which would represent a deeper intraday pullback and likely attract dip buyers. A break below that level would shift short-term sentiment more defensively and suggest that today's rejection turning into a broader retracement. From a momentum perspective, Generac is a consolidation phase. After a strong prior move, indicators suggest cooling rather than reversal. The RSI is pulled back from elevated levels, which is healthy in the context of broader uptrend. The long-term trend still remains constructive. Generac continues to trade above key moving averages, indicating that institutional structure is still intact despite today's hesitation at higher levels. Sector context also matters. Industrial and energy adjacent names are seeing mixed flows today, with selective profit taking near recent highs across the group. Generac is tracking broader rotation rather than reacting to company-specific catalysts. So heading into the rest of the session, the key levels to watch is the support at 282, which is there in the centre of the screen, to 278, with the resistance at 288 to 290. Overall, intraday bias neutral with a slight bullish lean as long as it holds the 282 mark. The key takeaway is that Generac is consolidating in resistance, not breaking down, and the next move depends on whether buyers can reclaim the 288 breakdown zone or defend the 282 into the close. Okay, next up, let's take a look at Dick's Sporting Goods. So as you can see at present, Dick's is trading around the 215 to 260 mark, down roughly 2 to 3% on the sessions, after opening near the 218, 219 mark and failing to sustain early momentum. The stock remains under pressure following last week's earnings reaction, while strong sales were overshadowed by a reduced full-year profit outlook and margin concerns tied to the Foot Locker integration. Today's structure shows a clear fade from early strength, with an open at 218 to 219 and a high of 218, and a low of 213 to 214, currently at 216. The key theme is lower highs throughout the session, suggesting sellers are using rallies to reduce exposure rather than chasing upside. The stock attempted to stabilize mid-morning, but each bounce had been met with supply near the 217 to 218 mark resistance zone, confirming that overhead pressure is still active after the earnings-driven volatility. So the key zones, as I mentioned, is the 214 to 213 zone, which is down around here. That's today's intraday base, and this is the first area where the dip buyers are stepping in. If that holds, potential bounce back towards the 218 mark, then possibly retest of the 220 to 222 resistance. If support breaks, the next downside level could be the 210 mark to 208 mark, and that would signal deeper post-earnings consolidation. The resistance levels is the 218 mark, which is here, to 219. That's the intraday rejection zone, and the 222 strong overhead resistance. Above that, trend stabilizes more and more meaningful. Momentum remains neutral to slightly bearish to intraday, but this is primarily a post-earnings digestion phase, not a trend breakdown. As long as the 214 mark holds, the stock remains in a controlled consolidation. A break below would open the door to a deeper retracement. Okay, next up, let's take a look at American Airlines. So as you can see, American Airlines is currently trading around the $13.93 range, down 2.89% currently, as the stock continues to consolidate after a strong multi-week recovery from its spring lows. Today's sessions show a fade from early strength, opened at $14 to $14.15 range and had a high of $14.30 to $14.35. There was a low of $13.95 and it's currently at $13.93. So the key intraday pattern is a failed morning push higher followed by steady profit taking. Sellers have consistently stepped in near the $14.30 range, which is around here, which is acting as a short-term resistance. So we consider the $14 mark around here as the immediate psychological support, and then the $13.85 is the next intraday support zone. If 14 holds, then American Airlines remains in a controlled consolidation, and a breakdown below the $13.85 mark would shift momentum more defensive and open a move towards the $13.60. Airlines today are mixed, with traders rotating between names like Delta, United Airlines, and American Airlines, depending on relative strength. And American Airlines is slightly underperforming its peers, which suggests mild rotation rather than sector-wide weakness. American Airlines is in a healthy consolidation phase, not a breakdown. The stock is digesting recent gains, with traders watching whether the $14 holds as support or whether momentum can rebuild above the $14.35 mark. If support holds, expect stabilization, another attempt higher. If it fails, downside extension towards $13.85 remains more likely.